Everyone, and welcome to this week's installment of Mish's Market Minute. I am again Mish Schneider, your host, and thank you to StockCharts for having me do this every week. And we still are in the thick of earnings season. So once again, I picked a random selection of stocks, names that I like, names that I've been watching, names that you might be watching, to go over with you all the names that reported this week, the week of February 8th. And of course, we have still some earnings left, but earnings season is a bit starting to wind down. So some of my favorite names came up on the register this week. And again, it's 25 stocks. I'm looking this time at consumer discretionary, farmer, still some healthcare, industrial, real estate makes it in there, autos make it in there, a couple of financial, cybersecurity, and big data, something I've really been very interested in. And once again, here is the symbols of all the stocks that I will be covering today, with one extra follow through from last week if we have time at the end. So let's get started. Okay, so we're going to start with Datadog. Now, Datadog is actually a company that has been doing a lot of stuff with big data. So what does big data mean? Big data means that every time you buy something, it gets tagged, and as you know, you'll get all these different ads from all these different companies that are related to what you just talked about. I mean, it's amazing how many times that happens. Sometimes I don't even put it into text, I just say it. Like, for example, my husband's favorite cookie, Oreos. Hey honey, I bought you Oreos. Next thing you know, I see Oreo tags coming up on my Facebook or on my other type of Google searches. So where does that come from? Comes from companies like this. Now, Datadog reported, and you can see it was looking really, really good, but then it gapped lower this morning. I look at that as a potential buy opportunity. We were actually long this stock from 95, 96 right here, took profit targets along the way and got out on this day because we did not want to hold it into earnings even with our cushion. That's very often what we'll do, is we'll actually take a look at the earnings if we don't have a really big cushion to get back in as a possibility. If it gaps up, so be it. Then it's a different story, as I talked to you about last week, momentum trading. But since I'm more of a, I like to buy when I can see my risk type trader, at this point, the low today, and being Friday, the 11th, was 108. I was actually hoping we would get more like to 105, 107. So as far as I'm concerned, at this point, I would not do anything on this Friday, and I would wait to see what happens next Tuesday. As you know, Monday's President's Day. And if we can make one more move lower, perhaps that would be, for me, the best opportunity, like I said, somewhere between 105 and 107, because then I can control my risk to underneath that 50-day moving average that's coming in at 103. Would I chase strength in this? Well, at this point now, you have a lot of congestion here at 119. So what that tells me right now is it has to get through there. Would I buy it above there? Potentially, except that then I would have to reassess my risk. And most likely in that type of situation, you would go to an older high. So probably around 111, 112. So that's something to keep in mind. If we look at the momentum, you can see it broke down under the 50-day moving average. Although it's declined in leadership, it's still slightly outperforming the SPY. Next stock is Disney, excuse me. And I actually talked about Disney. Disney made money on, obviously, their streaming services, their subscriptions. Their EPS was not as bad as what one had expected. However, their theme parks are still closed. So it came in, it looked like it was going to come in much higher. After hours, it was actually doing well, but instead it came in higher and then proceeded to sell off. Really, if you look at this stock, I think that if it can get closer to around 182, that would be probably the best area. I don't like this type of bar when it opens up and then starts to sell off. So I'd give this a little bit more room. Does Disney have a future? Absolutely. Because at some point, these theme parks will open up. So there you go. I think if it can hold around 182 or maybe get back and close over 190, we could be looking at around 210 in this stock as a good target. So now we're going to go on to Simon Property Group, which also reported. And you can see that this gapped up and now is consolidating up here. So once again, we always have to look a little bit behind here to see where we're at. So if we go back here into March 2020, you can see we had gapped lower here. So right now we're right into where that gap level is. The low on this day was 109. And the high here is a little bit above that, but the high here today is also above it, but right now it's trading about 109. So we're going to call 109 pivotal. Momentum here is good, coming down a little bit. So this is the type of situation where we're getting what we call an inside day, which means today's range thus far is inside the range of the day before. And again, if you're more of a momentum trader and you believe that real estate still has room to go to the upside, and a lot of that's going to have to do what happens with interest rates, then you might want to be taking a look at this one too. Not my favorite, but nonetheless, there is an opportunity there if you want to say it holds somewhere around 104 and kind of stays pivotal here at 109 and then clears the more recent high at 111.42. Next one is one that I think I showed you in the very beginning of the year because this was in my Outlook 2021. We, of course, bought Viacom, and we're still in Viacom, and that's just been like a gift that keeps on giving every single day. But 20th Century Fox is also in the telecommunication space. This also reported, obviously you can see there's no fireworks here. In fact, this is kind of an ominous looking formation when you get this big spike. So it almost could be potentially a head and shoulders top so that's something to keep an eye on. So where would this start to actually look like it's negating that stop? Really, at this point, again, if you go back here in a little bit history, I would say to me, over 35 would be interesting. Otherwise, I would leave this alone. And if it breaks down under 30, I might be saying, gee, well, where could it go? Well, if you look at that, it could actually go all the way down. We hope that doesn't happen. But nonetheless, at this point now, we're sort of in the middle of nowhere, possibly another shoulder, or possibly just this was just an anomaly. And like I said, through 35, we get a little more confidence. Momentum is okay. Next one is Masco. I've really been paying attention to this stock. This reported, and this is in the industrial sector. So this would be something that when the economy starts opening up more and more could do well. I've traded this stock a lot through the years. I haven't traded it recently. And what you can see here is it's been over the 50. And now Friday, after sitting right on top of the 50, it's trading right under. So there's no real great sparks flying here. Look at this. We've got a negative momentum, probably more negative than what the price is. So there's a bit of a divergence, and it shows no leadership whatsoever. So what would I do with a stock like this? At this point now, I would either wait to see if it can get down to the 200-day moving average somewhere around 53.25, and then at least you would know right away if it's going to hold or not. Or with all of this chop and consolidation, I probably want to see a little bit more positive momentum and a 2-day return over the 50-day moving average. Mattel, I just thought it would be fun to look at a toys company, figuring that the toys must have done very well with people being home this year. And sure enough, you can see now that you had earnings, but not much happened. And you're getting 2 inside days. This is actually a very interesting looking stock, although it has a negative divergence here. As you can see, it's under the 50 where it's over the 50, and it's showing no leadership at all. But with 2 inside days, if it breaks down under the 50, I'd leave it alone, probably, and see where it settles in. However, on the flip side, if it can take out, let's say on Tuesday, 1887, which was the high of yesterday, or 1890, you actually have a really good risk to underneath the 50-day moving average at 1770. And that might be something to be looking at longer term as a good, solid company. Next is Today Healthcare. This used to be also a favorite stock of mine. Really, basically, I kind of missed this whole move. I wasn't paying much attention to it. But remember, we said that healthcare in the 2021 outlook could be a hot area. But I probably wouldn't touch this one either because of the momentum just went negative here. So we have a divergence, and it really didn't do very much. I'd like to see a dip, maybe a dip closer to around 44 where the 50-day moving average is. Sometimes it breaks down under the 50 and comes back through. I always like when that happens. And maybe I would also be keeping my eye on the momentum and the lack of leadership here. So far, this has been interesting to see, but I haven't seen anything that's making me say, write this down. Here's another one, Yelp. And of course, Yelp is another good earnings reporter, another 2 inside day here. You see that? You had the big bar right here, inside range yesterday, and now inside range of yesterday's range today, which means it's on pause, it's consolidating, and traders are trying to figure out what's the next move. Where do they want to commit? Well, if we look at the momentum, it's in line. There's no divergence. Leadership is solid. So with this one right here with Yelp, you really have to, at this point, actually wait. And again, there are people who love to trade momentum. If you wait for that momentum to come in and you buy it here over 40, then you would also have to figure out where your risk is. I would say probably around 34. Okay, so that's a $6 risk. So you have to say to yourself, gee, do I think this thing has the potential to go up $12? And the only way we can look at that now is to go to the weekly chart. So if you look at weekly on this, at 40, can it go to 52? Well, look where the high was, right here. This high right here was at 52.50. So the answer is yes, you would be actually banking on the possibility that this can go match the high that it had in July. No, it's actually not even July. It's September 2018. Now, I don't think this is such a bad thing, actually. I'm actually going to write this one down because if things start opening up, I know in our town, restaurants are opening up. You could actually say that Yelp might actually do better and get up to the highs. So again, it would be a buy over 40, a risk for 34, looking for a target of around 52. All right, next one here is Toyota. I'm not surprised to see this type of action at Toyota. It's still the most popular car company. A little extended now. Look at your momentum. It actually has really done well with the momentum. The leadership is now just starting to get interesting, but nonetheless, this is the weekly chart. Let's take a look here at the daily chart. Whoops, back here. And on the daily chart, a little bit more sobering in that, again, look at this. You have all these inside day, 2 inside day patterns. So why do I like 2 inside day patterns? Because you can buy over the outside day and risk to under the outside day low. So I'll say that again. You can buy over the outside day high and risk to under the outside day low. And this really tells you now, again, traders are on pause with Toyota. So the outside day high is 155.61 and the low is, the low is 155.61 and the high is 163.37. So there you go. You're working really with a $8 range, which is a lot, but this is a big stock trading at that. Momentum right in line. Leadership is great. Okay, let's go on now to good old Coca-Cola. Now, Coca-Cola, obviously you can see, has been under a lot of pressure. While a lot of stocks were doing really well in this year since basically the start of the year in 2021, this thing got kind of crunched. So outperformance, though, is interesting, and the momentum is getting better. No divergence. Momentum is under the 50, and the price is under the 50. So this makes this very simple. If this is a company that you're interested in getting involved with, all you have to do is wait for this to clear 51.20 for 2 days to confirm, and then you can use the low of the day that it actually cleared the 50 as your risk with a little fudge and see if this can't get itself back up to 55 or higher. And this is the kind of company that all they have to do is make one announcement that they're getting into the cannabinoid business. That seems to be the big buzzword today. And when I say today, I don't mean literally today. I mean this year. It's something I've been following for a while, but I think it's really interesting now that it's starting to get more and more mainstream, the whole idea of cannabinoids and cannabis. By the way, as I've been talking to you, Datadog just broke out. Let's just take a quick look here what happened. If it's anything we're interested in. Well, it looks like it wants to fill this gap here to 114.73. I may not get the dip that I want, so that would be where I would reevaluate it on Tuesday to see what's going on. Okay, after Coke, we've got General Motors. Now, there's been lots of great news about General Motors, right? In fact, so much great news, it actually sold off after the earnings. But you could have a potential double top here. So I would probably want to see what happens. Either it has to clear this 57, or at this point, I'd almost want to see it get closer to 47. Your momentum, of course, is declining and the leadership has gone down. This one at this point now, over 57, that would be a different story. But at this point now, really, this was a company that you had to be kind of forward thinking in. And even here, where you got an opportunity to buy it after it failed the 50 and came back through, that's what I'm saying. Sometimes it fails the 50, then it comes back through. That's when you use the risk under the low of the day that it got back through the 50. And then at that point, you would have had big money. But nonetheless, many people think that the future of General Motors is great because of the whole idea of the electric car and also the autonomous car. Okay, switching now. We're going to CME. CME is the group. I thought this would do better as well, but nonetheless, here we are under the 50 and another inside day, momentum right in line. So again, this is not so bad. This actually is kind of intriguing to me, because if we can get two closes over 185.10 or back over the 50, you could just use the low of this day, which looks like it as 179.69 with a little fudge. Maybe I'd go a little bit lower under about 177 to see if this thing has some legs to get back up into the 200 level. Zillow, who hasn't looked at Zillow these days? Now, this is a situation where Keith and I looked at each other this weekend and said, we should really be buying Zillow, and we didn't. We forgot, which happens. But nonetheless, this is a situation where it's hugged this 50-day moving average. So sometimes I have an actionable setup, and sometimes it's an education. This hugged the 50 at a time when the momentum was really weak. So if you just would have waited till the momentum started taking back over that 200 right here, you could have been involved there and you would have had a nice pop. Now, at this point, I would probably say if you were a momentum trader, then you probably would have bought it yesterday. But at this point now, you kind of missed the boat. But the bigger picture is it's just showing you how online technology for things that we used to do all the time by going to an actual real estate company and getting a broker, so much of that now can be done online, Zillow being one of the classic examples. Now, this I thought was really interesting. This is O'Reilly Automotive. I don't know what this reflects in terms of what's going on, any trend in the economy or anything like that, but I can tell you that this was not too long ago really hot and has come all the way off. So the question of what happens now, how do you deal with a situation like this? Well, on this day right here, it made a new 60 plus day low and then had a nice day closing above that low the next day. So this becomes your wall of support right here at 419.85. Is that right? No, excuse me, at 424.03. I'm looking up here, 424.03. We're now at 432 with another, by the way, inside day. 430 yesterday was the big bar. If this cannot fail 424 and it starts to move up, let's say a little bit, maybe even over, I'd say like 437, that could be an opportunity to look at to buy low. But again, always want to look at that momentum indicator. If it keeps ticking down, it just shows you there's no interest. It has to start turning up as well. Teva is another one. It's a pharmaceutical that reported. It had high expectations and whammo. So that's what's so interesting about earnings seasons. It's never what the expectation is. It's the reaction to what happens if the expectation isn't met. And clearly, I would say that's what happened with this one. Now, what would be interesting here as we get close to the 50 at $11 is that now that it made this huge move down and the momentum hasn't really budged, is to watch this momentum to see if it can get back over the 50-day moving average. And if it does, look at what a tight risk you would have. So this is a good company. I would keep my eye on that. It's not one I necessarily write down, but it's certainly an interesting stock. All right, Zenga. This is consumer discretionary also. It says toys there. So unlike Mattel, this one's done a little bit better, although Mattel was pretty interesting as well. And again, you've got 11, great support. Inside day happening here through 12. This could be something that you may want to look at. $1 risk. Really wouldn't want to risk more than that. Always give it a little fudge to see what you can get out of this one. But I've seen a lot of chatter on this name recently. Vroom. Buying cars online, is that the future? Okay, don't know. New issue, no momentum here. That's what you can see. Very strong outperformer. Interesting after earnings, it's just sort of consolidating here. So I would either wait for some kind of a dip to 45, or if it clears through 50, this to me, I think is an interesting future. Anything that's been coming out from technology that does online what you knew had to do in person, even though I still believe the economy will come back and people will be going to restaurants and shopping and all that, I still also think that there's going to be a big future of shopping online for things like healthcare, which already happens, and like we're seeing here, real estate, and now cars. So keep an eye on this one. 45 to 50 is your range. Okay, next one is Sono. Another one I've seen a lot of chatter on Twitter, technology, electronic equipment. Look at that. I mean, what I really think is interesting is that these trends, these technology trends are still so hot. So I'd say again, boat missed on this one. If you think, I mean, I wouldn't know much about the company, but I will say that if you like this type of trade, remember we talked about gap. This is a breakaway gap. So what that means right here now is that you don't want 3140 to be filled. So if you were interested in buying this somewhere around this 35 level, you could probably risk about $3 to see what this has got on the upside. Okay, now let's keep going. I have a lot to cover here still. I want to get to it all. This is iRobot. Now, this also was in the news. I don't remember why, if this was maybe a target of the Reddit traders, but nonetheless, you could see it made this big move and then it got sober. So right now, the momentum is in line, the leadership is in line. And if we just take a look at this chart, after this big explosion, it came down, almost tested where it broke out from at 100, and now it's trading 134. This looks to me like it could be a bear flag forming because you have sort of a pennant, not the best looking bear flag I've ever seen, but nonetheless, this is something that I would probably want to see another big dip and control the risk down to around 95, 96. Pepsi, another. We've had Coke, no Coke, Pepsi, those of you old enough to remember that. So the beverages are just not doing very well. I don't know if we've all of a sudden found religion in this country and are not drinking as much soda as we used to, but I will say that this is a very, very poor looking stock right now. Not something I'd want to be interested in. Unless, of course, we get one of those new lows and then big gap turnaround the next day, and we start to see momentum get back over the zero line. Very, very interesting here. Super Bowl probably didn't help these companies at all because it was a very low watch Super Bowl this year. All right, this is Duke Energy, and I wanted to take a look at an energy company because oil has actually been very, very strong. Energy, not as strong, but still doing pretty well. And so right now, you can see that this has failed the 50-day moving average. So this is definitely not one of your stronger companies within the oil space. And remember, I covered oil companies. If you go back to my archives, I covered oil companies that are getting into the alternative energy space. We talked about British Petroleum. We talked about Valero. We talked about Dutch Shell. In fact, there was a story about it. I didn't see Duke Energy as one of those companies. So that's why right now this doesn't look so good. And by the way, if you want to look for something short, then this would be something that you could short against that 50-day moving average. I get out real quick, though, if it got back over the 50. And if you're more inclined to be a bull on this, you'd want to see this go 2 closes over the 50, the momentum improve, and the slope of the 50-day, which is still pointing down, to start to neutralize. All right, next one is Net. This is one was on my list for Market Watch 2021. This is a Cloudflare company. I like this AI type company, cloud computing, but it didn't report as great, even though it's been upgraded by like pretty much everyone. To me, that's great. This would be something I would definitely keep on my radar. And I will be keeping on my radar because this was one of my picks, because now you actually have a decent risk down to the 50-day moving average on this gap. But give it a little time to prove itself. See, the momentum is not all that great right now. So you really want to see now this Bollinger Band line, the dotted line, and start to move back up. Then at least you can say, I got a good risk under the 50-day moving average because the momentum is showing me that it's not so negative. Now, I know last year I gave you this one. This is HubSpot. I gave you Zebra, VBK, and HubSpot. I remember it well because I was talking about small cap growth stocks. And this was high on my list of small cap growth stocks. Why? Because this is technology in the retail. Again, one of those companies forward thinking to make things easier to do without actually having to have human contact. How sad is that? But it had this breakaway gap here. Not my thing, but now you have a place to look at for Monday if you're interested, and that would be at around 498.75 or 500. If this starts to fill the gap lower, then you want to see where it stops. But nonetheless, this proves to you that this type of technology is going to continue to be hot and obviously did very, very well on its earnings, far greater than what was expected. So again, I wanted to go back to the industrials. This is another one that gets a lot of buzz, and look at this. Unlike Masco, which has been really terrible, this one, generic holdings, has done very, very well. Is there a play here? Well, again, if I've taught you anything on this, is when you get these gap after earnings, you can buy them on a momentum trade. You just risk under the low of the day and watch it go. Obviously, you know right away if you're wrong. That was one of those examples there. Okay, so I've got one left, and then I'm going to show you something follow-up from last week. The next one here is cyber. I was really excited to show this one because cyber technology, you want to talk about hot, obviously a very, very hot topic, along with the big data, like I mentioned in the very beginning. So with this one, look what's happening here. Sideways action, my goodness, for a $163 stock to have zero volatility, basically, and just going sideways. This could be an interesting play for an options type trader. If you know how to do that, basically you do a 160, 170 kind of situation. You're really banking on it's either going to go high up over 170 or break down under 160. I don't want to go into the details of that, but you options traders should know what I'm talking about. And now, for us other traders who aren't going to do options, if it continues to hold 160 here, what it tells you is over 170, you've got a $10 risk, but it should really go. In fact, I want to look at the weekly chart on here since it's my last one. And you could see that we're actually at, I believe, this is new all-time highs here. Yeah. So we're in new all-time highs, and we're consolidating, and we have a very low volatility in a market that's been actually pretty volatile. So this is also really interesting. CyberArk at 170. I covered UFO with you the other day. Excuse me, not UFO, TLS. And that actually was doing well and has come off. This one too, keep an eye on that one. Now, the last one is just going to be a follow-up of the one that I told you I was writing down last week after report, and that's Gilead. Now, Gilead here, this is weekly, so let me get back. Oh, no, this is a daily chart. Look at what's happening here. Now, I have a very different, I'm going to look at this the way I'm seeing this, because I'm seeing this like this. That's how I'm seeing it. So this, the way I'm looking at it is it's back under the 200-day moving average. It's getting not quite an inside day. Looks like today's high was a little bit higher than the day before. Your momentum, though, is still relatively good, waned a little bit. It's got to get back over this line right here, the black line. But this, again, pretty simple. If we can get back over the 200-day moving average, which is at 67.28, do it for a couple of days, then you can risk down to this low 66. I still think Gilead could have a future if that happens. Okay, that's it for now. Thank you so much. Hope you have a really nice weekend.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.